Hey traders, this is Blake Morrow with Traders Summit, and with me once again, and it's been about time, Tracy Shuchart. How are you? And by the way, I need to say, partner over at Intelligence Quarterly. Good to see you again.
Good to see you again. Always a pleasure.
Yeah, I'm actually really excited, and at the very end, I want to hear more about your new role now that it's officially happened, and you've been in the driver's seat for a couple of months. I'm excited to hear all about what you're doing over there. But before I do that, I want to talk a little bit about the markets since I've got you here. And, we're going to talk about crude, but and you've been right, especially talking about crude, thinking it was going to be sideways. But I want to actually talk a little bit about gold first, because when you and I last spoke before our annual event, we talked about what gold was doing, and it was breaking out at the time. And I'll pull up a chart, daily chart, and I think it was right around the March timeframe, and gold was breaking higher, and then all of a sudden it kind of failed up there at the highs. So what are your views on gold, and how did you trade that, by the way? Because I know it's been a couple of months.
Yeah, I mean, we got a nice little pop out of that. It was a nice trade. It wasn't, something that we stayed in for any length of time. I'm always hesitant to hold gold too long because it's been pretty sideways for a year and a half.
Yeah.
We haven't really seen a breakout. So usually when, if I'm trading it, and I was trading the miners, kind of have very hard stops on that, right? Because you can tell pretty quickly, how if it fails. But so gold's back in its range and doing what gold does, which is nothing. I mean, I still think that it's, something you might want to have in, a percentage of your portfolio allocated to it. But, as far as trading is concerned, probably more of a day trader trade than anything else, just, at this point. I mean, we're still, it's still holding very high levels, comparatively speaking. So.
And I was going to ask you really quick regarding gold. A lot of people, go back to the inflation narrative. That's the bulls, the bulls go to, inflation's high. You're going to want an inflation hedge. Let's pick up gold. And there's, you got Russia, Ukraine, that event happening. So that invasion happening. So I need to own some gold, but for all intents and purposes, we really haven't gone anywhere. So are those still valid arguments to be holding gold?
I mean, I think that's, I didn't really, if you look at, it really hasn't been an inflation hedge. Let me put it that way. Yeah. Oil has actually been an inflation hedge. And so, this whole time when we've seen inflation spiking, gold really hasn't gone anywhere. So people aren't clearly not using that as an inflation hedge at this juncture. And they have been using oil on and off. The other thing with gold is, what is kind of difficult to understand sometimes is that the paper market is very different from the actual physical market. So if you're out there going to, your local gold dealer and you're looking, to buy, gold bars or what have you, a lot of times those are priced well over spot prices, right? Well over futures prices. People have difficulty getting them. So the physical market is much stronger than the actual paper market. And paper market, I mean by the futures market, where it's really just an IOU.
Yeah, that makes a lot of sense. And it's been a while since I visited my local gold buyer and bought physical gold. It's been a few years, but I'd imagine from what I've heard that you're right. Those spreads are like pretty wide right now.
Yeah.
So, well, it's interesting to see gold and we are at support. Do you have any solid view on what it should be doing or where it's going to be going?
I mean, I think that eventually we'll have a breakout because, we have been holding this, it's still, it's sideways, but it looks like a huge range, but it's really not that. So, it's like a $300 range, right? Which sounds like a lot, but it's really not a lot for gold.
Right. Okay. Well, let's turn our attention to crude because like I said, you're really spot on with crude. You thought we were just going to consolidate for a while, and we had talked probably right around here, and you're like, yeah, I think we're still going to be consolidating, and we have been, and you've been right on that. It just, we've been going basically sideways. So what is your main view on crude right now, with where we're currently at?
Well, the thing is with crude, I think that barring any unforeseen circumstance, we'll probably see a spike this summer, because we really are, even with prices this high, we're not seeing demand destruction. Now, we did see a little bit in like February and March, but now we're starting to tick back up again, and we're just heading into summer, right? So implied demand's about 19.667 million barrels a day right now, which anything over 20 is kind of amazing. So, and at 19.6, that's still pre-COVID levels. So again, we're just not seeing demand destruction yet, even though we've been holding over $100 for several months, right?
Yeah, and we haven't, and that brings up like something I really wanted to talk with you about, because if you think about way back, and let me put on a weekly chart, way back here when crude was pre GFC or Great Financial Crisis, crude was rallying and getting to a point where the market actually started to view the rally in crude more as a negative, because it would start impacting consumer spending. Have we seen any evidence of that as of late? And do you expect that to happen at some point?
I mean, it's not a one-to-one correlation. Obviously, the markets are facing current pressure right now because of rate hikes, and we're seeing some growth slow. Right, we just had like Target's earnings today, which was a disappointment. So we are seeing maybe perhaps a little bit of a dent in consumer spending. It's kind of too early to tell, but I think that higher prices are weighing on the market a little bit.
Yeah, it's kind of weighing into that consumer spending narrative, and at what point do Americans actually ever start to carpool?
So, I don't, likely not. But, but the one thing that I am really concerned about this summer is that because we're not seeing demand destruction, right? And we're seeing, the US is seeing really strong draws. We just had inventories out this morning, which is Wednesday that we're filming this. And we had like a 4 million barrel draw. We have inventories 8% below the 5-year average. We have the cracks are blowing out for distillates and jet fuel. Now we are seeing those come in a little bit, which is a good thing. But what my fear is that what refiners, because those margins are more lucrative, that they're going to stick with like distillate and jet fuel production runs rather than gasoline, which could cause gasoline problems, gasoline shortages in the US this summer. So we'll have to kind of see how that pans out. It is a relief to see those come in a little bit. But that's kind of the situation on the ground that I'm looking at this summer. So, I think we're going to have higher gasoline prices for longer, unless we again really see some sort of demand destruction, which we're just not.
All right. Well, I'm interested to see if we actually get that at some point, because as you pointed out, the correlation's not quite there, and correlations just in general have been kind of wonky, I guess, maybe even post COVID. But I'm assuming there's a pinch coming to the consumer at some point, where we are seeing it bleed over into Walmart earnings. Maybe, I don't know if that's the single catalyst, but we're seeing it in Target earnings, and maybe people realize that the dollar is going to have to be allocated towards energy costs versus other discretionary spending. So it will be very, very interesting to watch as that evolves. But I want to ask you this: over at Intelligence Quarterly, what do you guys and gals write about over there?
So we're basically we're a macro publication. I focus on energy sector and metals and materials, which could be categories. It's one. So I write twice weekly on both. We have two subscriptions that you can get. We also have a lot of free content on there. That's macro free content, Pack Asia, Europe, United States. We have writers that come along. If you go to the site, which is intelligencequarterly.com, go check out the site, see what's free. There are subscriptions available there for different sorts of content, but that's kind of what we're doing.
Well, that's pretty exciting. And well, I guess if I want to find more about what you're doing and what you're thinking, rather than trying to watch us here at Trader Summit, once every month and a half, I got to go to Intelligence Quarterly and check it out.
Yeah.
Well, Tracy, I want to really thank you for your time and always, spending time with our community here at Trader Summit. And I look forward to our next conversation. And I know right now you're kind of in process of rearranging where you're going to be permanently. So we look forward to having more permanent conversations with you in your location.
Perfect. Thank you.
All right. Have a great day.
You too.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.